Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks with another live session with you all. And today, in a very tumultuous market, uh, which is giving no chance for exit for most of the investors, I welcome you all and hopefully you are keeping calm and keeping your nerves in a market which has completely destroyed wealth for people who have bought into slightly illiquid mid and small cap companies, especially I'm sorry, especially with whatever that has taken place yesterday, with the kind of excruciating fall that we saw in the top 10 stocks. I was looking at the numbers, and the first 10 stocks that fell, and the fall was between 9.5 to 20%. So it has been heavy fall across the board, and so we'll discuss about that, and that is why the heading, that whatever that it is, so I'll explain about that as well. So I welcome you all. Surender, very good morning. Mr. Pawar, good morning. Hope more people join in. It's going to be a very interesting session what I want to discuss here. uh, it's not going to be the same thing that I would like to discuss about some stocks or the market itself, but it's on a more broader basis, because whatever that is happening at the moment, at least for my members on Patreon and YouTube and say WhatsApp, it is kind of new, primarily because probably they have got into the market at the fag end of 19 and probably in the fall of 2020 and all that. So it's nothing new what is happening currently. So it happened in 2013. I've talked about it. It is happening again, and this is going to be a painful journey for whatever time it uh, survives or stays. But if one survives this, then things could be extremely rosy on the other side. uh, so, hi Dominic, morning. Uh, Rishikesh, very good morning. I would like more people to join in. I know it's a Thursday morning. I should have done this on a Sunday. That would have been better. But uh, rather than waiting for that, I wanted to get the session done now because of the kind of situation we are in. And then everyone can watch it once it is uploaded and recorded, so you can watch it later on as well. Why I say this is an important session is because I want to discuss about the history of the market over the last 6 7 years, and try to take out from there as to where we are and what is happening, and is there any rationale or not. So that's the thing. Buchi Babu, a very good morning to you. Thanks for the support. Kindly keep supporting. Morning HP. And so basically, if you look at the market, 16,000 on the Nifty doesn't show you the pain that is in the mid and small caps. And this is exactly what was the scenario in 2018 and 19, where the Nifty went up, in fact, between 2018 January till 2020 March, up till the fall that's happened. I think it started happening in 2020 February. So from 2018 Jan to 20 Jan. In those 2 years, the Nifty went up around 20% in 2 years. And the mid and small cap index, it just got battered out of shape. I remember the small cap index being around 9,500 at that point of time in March 2020. I'm talking about. So this is the kind of sell off that you can see. Small cap had a high of 16,000, went to 9.5 or 9,000, 9,500. So we are looking at a 40% sell off in the index itself. That happened in 2020. So everything needs to be looked at in a perspective. If you are down from the top by around 20%, 25%, it's perfectly fine. I mean, you are doing better than what the market is doing, basically. Yes, the Nifty is down 18%, 17, 18%, but you look at mid and small cap indices itself is down big time, are down big time. And some of the stocks are down. In fact, many of the stocks are down 60%, between 40 to 60%. Some are down even 70%. Uh, Just a note on the Sequent results, because Sequent went to 107, I think, right now, 107, 105 from 330. It's down more than 70%, 75%. Although results were okay. I won't say results were very good, but they were okay, and okay is not good in this market, and everything is getting battered. So Sequent might head towards 85. That's my assessment. A disclaimer, I have the stock in my portfolio. I am in a heavy loss in that as well. So being in loss is not the issue. The point here is what everyone is asking is to where will this end? Where will everything end? What is happening? Why is something like a Acrisel falling 6-8% every day? Why is something like a Dixon has fallen from 6,000 to 3,300 and there is no stopping it? Why is something like a Naukri that is down from 7,700, 7,600 all the way to 3,300, and it looks like it could go to 2,500? Why is everything looking like that they could fall 50% more than what they have fallen? Basically, that is the question, and I understand that most of you might be having that kind of a you can say hollow feeling in their stomach, that okay, is this over, or we are looking at a scenario where I could be down 30% more on my portfolio too. So just to tell you, and I'm not trying to mince word here, you could be down 20% more from here over the next 1 month. But if you look back, see, a simple thing is when we talk about, and I'll go step by step. So just to let you know, when we talk about investing into the stock market, uh, we say that okay, it is, our elders have always said that is extremely risky. People lose money, people lose wealth, people lose their homes behind it. The prime reason for this is exactly what is happening currently. So basically, what happens is your mid and small cap stocks get bashed out of shape when liquidity go back, and there is less liquidity, less money to spend on the market. Second thing is when interest rates go up, they will get bashed. But if you look beyond it, even if I go back, so I have been in this market since 2011 November. I remember at that point of time. So very clearly Nifty being around 4600 or 4500, around those 46, 4700 Nifty, and everybody was like writing obituary about the Nifty, and by the time February came in, Nifty was at 5500. Then we had a excruciatingly painful 18 months in which from February till August of 2013, from February 2012, the market just kept on going down, and mid and small cap was completely like they were beaten to pulp, 70-80% down. So that happened in 2012 to 13. That happened again in 2016 in 2 months. That happened again in 2018 Jan to 20 Jan. And that happened another time between 2020, say between Jan and March also. The stock fell, but there was a different reason for it. So I won't take that into account, those 2 months. It's happening again now. Whether this will continue for 8 months, 18 months, 24 months, we don't know. But what we know is that afterwards, a rally does come in at a price. Everything is good at a price, everything is bad at a price. Now that the market has fallen so much, now that the stocks have fallen 60, 70, 80%, things are looking fine. They are not looking as bad as you would say in hindsight, of course, in October, November, when everything you bought, you made money. So it doesn't happen in the market, and market shows you as to what happens when you probably believe that everything you will buy will make you money. So basically, what is the scenario right now? Let's come back to the topic. So that was the scenario in 2011, 12, 13. That is how the market has behaved basically, and that is how the market will keep on behaving, I believe, over the next 100, 200 years. What does an investor need to do? So an investor who is invested, even a trader who has become an investor, I can frankly say, at least in one of my position, that was a trading position that has become an investment position. Many of your portfolios would have become investment positions. Again, that is not an issue until and unless those stocks were only bought because of the price thing. Then there is a issue. So whenever I take even shorter term trades for 1 month, 2 weeks, I take into fundamentally very strong companies, fundamentally the companies that are very strong. That okay, if the global environment change, if the macro environment change, yes, the stock may fall, but primarily speaking, the company is doing pretty well. So that is how. So that is where I am. That is, those are the people I'm talking to. I'm not talking to those people who have bought into a Lanco or a GMR or anything that is with high debt and then holding on to it and not selling it even now, because then you are headed towards a scenario where your capital could be 10% or 15% of what you started with. But in top class companies, say for example in Asian Paints with this Grasim news, and again not a recommendation, yes of course it would, if Grasim does well, they are expanding capacity, that's okay. That doesn't mean that they are going to sell big time. I mean, their sales are not going to go up big time in the decorative business. Grasim believes that they will expand capacity. They'll have benefit of, you can say, economies of scale, and eventually they'll end up probably making money because of economies of scale. They'll be able to sell at a lesser price, probably a discount, and make money and everything of that sort. But that is in the future. Now the probably the street believes Grasim trading at 18 20 times earnings, and Asian Paints trading at 90 times earnings. So it's better to sell Asian Paints, get into Grasim, or sell Asian Paints and don't do anything. So everything is getting sold into. But we have seen companies like Asian Paints, Reliance, TCS, etc., perform exceedingly well over a 10, 15, 20-year period. So yes, probably 8 or 9 months for Asian Paints could be bad, but going forward things could become extremely good. And the company may come up with other innovative activities, because you look at an Asian Paints per se, over the last 30, 40 years, through wars, through attrition, through many phases, through a recession, through the global economic crisis, and many other things, they have come back and given you 18 to 20% CAGR. Uh, there is no doubt in my mind that things will repeat. Point here is, when will that happen? How far can this go? And how will we make money? If we are down, say if somebody is down 30%, they have bought into good quality stocks, top notch mid caps and small caps. What will happen? So my point here is, what is going to happen is that uh the nature of the beast is like that. So whatever I have studied for history and over a period of, say, in the last 10, 11 years, as to how the market has behaved, let's not go beyond that, because in 2008, if we talk about that scenario, then everything is going to go to dust. I mean, the market lost 60%. I don't know how much mid and small cap loss. Probably you can probably check and let me know as to how far that went. But the market, the Nifty and Sensex lost 60%. So I don't think that will happen. FIIs have sold nearly as much as they sold in March 2020, 62,000 crores versus 50,000 crores now. They might end up selling 60,000 crores this month, which means quite equal to what happened in March 2020. FIIs are selling even more than the global financial crisis here in India. So things are bad, and things are extremely bad. I'm not saying things are not bad, but it seems like this may continue for a while. And by while, I mean a month. I'm not saying more than that. I believe the kind of catastrophic falls we are seeing, we could keep on seeing that after a little bit of rallies till about mid June to end June, probably 3, 4 weeks, 5 weeks, and then things will start bottoming out. By bottoming out, I don't mean that everything will bottom out and things will start going up. Debt free companies which are making money in dollars, which have very good guidance, and which are export oriented, simply, they will start performing well, because these companies, and especially IT as an index, has fallen 30% from the top that it made in January. It has fallen 30% from it. Some of the stocks made the top in October last year. They have fallen 40, 50%. Stocks in the IT domain have fallen big time. Something like a KPIT that is in my portfolio is from 800, it has gone to 430 or something like that. It has fallen something like 45, 47%. These are very good 50% CAGR profit growth companies especially KPIT. Like TCS, for example, is doing nothing and making 52-week lows, growing at very decent pace. Large cap IT, especially mid cap ITs like Birlasoft, etc., many other companies, Coforge and so on and so forth, they are doing well. L&T, Infotech, you name it. Even a Tata Elxsi has performed well. It fell to 6,000. It is doing well. Very few stocks are expensive. Tata Elxsi is expensive. I'll talk stock specific, but the whole index has absolutely got decimated. So what I'm trying to say here is that for the next 1 month, you might not see, but you might see sell off across the board. Maybe a Reliance at 2200, 2100, an index at 15,000. I don't know any prices. But you need to understand, suppose you have put in 1 lakh rupees, it has become 40,000, say 60,000 rupees, 65,000 rupees. You have not taken that out. And I am not saying yet you booked losses at this point of time. If you are buying into good quality, top notch, very good growing companies of 25-30% CAGR domain around those, and the stock is trading at 20 to 30 PE, then there's no need to sell. I can give you one example, and this stock is in my portfolio, Sigachi. Now that is trading at 15 times 1 year forward earnings, only 15 times. And the company is growing at 30%. The profit growth is 30%. The sales growth is 40%. The operating profit margin is 24-25%, around that. And the company is right now trading at 15 times. So this doesn't happen. This will happen, but this doesn't sustain. For go back to 2018-19 period, I had Dixon Technology in my portfolio at around 3,000 rupees. uh, I sold it, so I don't have it at the moment. It was around 3,000, which means 500 rupees, around 500 rupees or so, what, 600 rupees, just less than that. I think it was around 570, 580, if you take into split, etc. And it just did not move for a year. And me and my friend both were just frustrated as to why this doesn't perform. The numbers are there, everything is there. It was trading at one time sales. Eventually, when the move happened, and albeit because of the pandemic or even before that, when the move started happening, the stock went up to as high as four times sales. So it was 4x just because of sales. The sales went up over 2 years. So it became something like 10x, 20x, I don't know. From 500, I think it went to 20,000, or something like that, 18,000, or so. So it was a huge move, a gigantic move. Uh, and and uh, so, so that is the kind of move that will take place after the fall has ended. But will that happen in a straight line? Will that happen gradually? That is the question. That is the second question. I believe that will happen gradually. So probably in the next 4 or 5 weeks will bottom out at whatever level, be it 14,000 nifty, 15,000 nifty, I don't know. Will fall big time. Eventually will bottom out, and probably it will take 6-7 months for things to really recover, and probably you'll feel much better. So a KPIT, for example, at 420, 430 will go back to 560, 570 by October, November, and by Diwali. And remember, December and March are top quality, or top notch seasons, or quarters for the IT company. So then the results will also kick in. People would have priced in the inflation part. People would have priced in, you can say, uh, oil at $114 per barrel. And so at that point of time, things will start moving up, although macros will be bad. Macros will still be bad, but the stocks will perform. Remember what happened during the pandemic in 2021, when things were extremely bad. Stocks did fall between March and April, but then the recovery was huge, and things were really bad on the ground. Similarly, in 2020, when the lockdown happened, when the complete shutdown happened in India, the market bottomed on that day. And till the time the shutdown was not being announced, the market kept falling. So you have to understand, market is always forward looking, and that will always happen. At this point of time, there are two big uncertainties apart from everything else. One is how much would be the rate hike here in India and globally, and the second is how much uh, So the first is how much will be the rate hike here in India and abroad, and the second part is how much will the oil prices, or how longer would be this war thing that the oil prices will sustain towards $114. Now again, another example similar to what happened during the pandemic, what happened before that, is that if you look at the second wave of the pandemic, is that if you look at the scenario of the war, so the Ukraine Russia thing has not ended. Nobody is talking about it. There are people getting killed. There are a lot of things happening, unfortunately. But the market is looking at something else. Why? Because the market priced that in February when the market fell. So this will also get priced in. On June the 4th, there will be an RBI meet. There will be a hike, maybe 40 basis point, maybe 70 basis point, I don't know, 75, 50, whatever. And then there will be a commentary. The commentary might be bad for the market. For example, it is bad for the market. Over that 1 week period between 4th to 11th and 12th of June, things could bottom out completely. That's my understanding. And whatever the commentary, market will price that in. Say for example, the commentary is extremely bad for the market, extremely hawkish, then what will happen is you will see that the market will price in, okay, he can the governor could increase the rate by a 75 basis point again in August, and then 50 basis point in December and all that, and we could be headed towards something like 6%, 5.8% by the end of the year. So let's calculate backwards from 5.8%, how much would be the effect, and the market will fall that much over that 1 or 2 weeks period. Whether that will be 1,000 points, 500 points, we don't know, or whether the market will go up, whatever. Over that 10 days, 7 to 10 days period, that will happen. By the second half of June, if the selling continues the way it is continuing, we will be in a scenario to understand that okay, things have lightened up completely. A stock like for example an Asian Paints at 2300, for example, going to 2300, I should not be trading here. You will understand yourself if you have been in this market for more than 3 years. If you have been in this market for less than 3 years, then there is a different issue, because if those people who have come in after 2020 Feb March, then there is a different issue. Then they might just go away, because this is just the beginning of a catastrophe that could happen. That might not happen. That could happen. But again, I am saying that it's a momentarily thing. It's a it's a thing for 1 month or 2 months. Once things do bottom out for the market, I won't say it will just reverse completely the way it did during the pandemic, but you will not see the pain happening. So you'll see one or two stocks doing extremely well. You'll see a situation where one sector will start performing well. Which sector will come up, will only time will tell, but I believe export oriented sectors are better positions to do well. So those sectors will start performing, then the market will start performing. Then a Reliance and TCS say going to 2900, buying will come in. So a lot of things will combine, and then from July onwards, I believe things should look much better than where we are at the moment in terms of the market. All the macroeconomic conditions and the conditions of the economy will be bad. Yashasvi, thanks for your contribution. What about Happiest Minds and Infosys? Infosys, see, Happiest Minds is expensive even now with the kind of numbers that is producing. The problem that has happened with most of the high flying companies are that if you are trading at 80 times, 100 times, 120 times, some at 200 times, some even at 250 times, and these are consumer oriented or IT companies, if you are not growing half of that, so suppose a company is growing at 80 times, for example, uh, Happiest Minds was trading at 100 times but growing at 50, 60%, 70% CAGR. If you're not growing at those levels, market will bash you. Currently Happiest Mind is growing at 25%, so it should come to 50 times. So you just calculate the EPS, multiply that by 40 to 50 times, and that's where the stock will be in the next 6 months. So that's my call. I have not looked at the current EPS of Happiest Minds, but it will trade between 40 to 50 times. You just calculate that, that would be the price. But going forward, the move will happen. I'm sorry, in Happiest as well. So if you have more than 2 year time frame, hold on to happiest. If you have less than 6 months time frame, and you're not losing a lot, you need to exit, because things are not that in a scenario that you'll make money in the end. So that's the call. Coming back to what I was talking about. So the thing is, things are bad, things can get worse, but we are not far off from a bottom in terms of the market condition and things looking up. So probably July onwards, things should look up, and October, November onwards, we should get going, because market will price in all the things that are there over the next 2 to 3 months. That will happen unless something really bad crops up here in India because of some fraud or anything in large companies, or something extremely bad crops up in the global scenario, where the dollar, where the either the dollar goes beyond any control, or you'd have a situation where the oil prices goes to 130, $140 per barrel. That's a different scenario. But at $114, if everything remaining same, then market will price this in over the next 1 month, and at most over the next 3 months. Santosh, hold on. See, I we have to look at the results tomorrow and then see. I believe there is more downside. I still feel in Naukri, the way it is falling, making new 52-week lows, I see 3,000 coming. But if the results are decent enough, the fall could get arrested. So that's the call. You could see 10-15% more downside in your top quality mid cap stocks. You could see 30 to 40% more shaved off from your bad quality mid cap stocks, which have very high debt, because the interest rates are going to go up, and it's going to have a negative impact no matter what companies say on companies which have high debt. So kindly take that on note. So that is this is probably, I wanted to say that this is the nature of this beast, that this is how these markets, mid cap market, perform. And that is why your elders or our elders, my parents have always told that it's a very risky thing to get into the market and make money. But from my experience, I can tell you frankly that you can make money, you can make big money by just purely being invested in the market and not doing anything in this kind of a scenario. And if you have top quality companies that are performing, that is giving you 25-30% profit growth year on year, you don't have to worry. 1 or 2 quarters could be an aberration. Have 2 years of buffer. Just leave your portfolio for at least 6 months, and if possible for 2 years, and then you'll see how the performance would be for your portfolio. So I think this phase of extreme declines in the market could be for 1 month, and over the next 6-8 months will settle down, and you'll recover some of the losses. And probably by July of next year, so in about 12 to 14 months, we would be making a lot of money. I'm very confident about it, that by the time next summer comes around, things will be totally different. That is how the market has always behaved. If you take October as the peak and the start of the declining phase, by May it's going to be 7 months, and by January of next year it's going to be 14 months. I don't think this could stretch beyond 14-15 months, and things will start looking up. Okay, Mr. Pawar, thanks for your contribution. KPIT or Mastec for 3 years? Uh, Difficult decision. I have both in my portfolio. I believe Mastec is more attractive, but KPIT has a lot of growth in it. Probably you can split it, and I believe if you ask me, KPIT should come up with, so FY22 they have come up with 10 rupees, 23 will be 14, and 24 should be closer to 18 rupees, at least 18, maybe even 20 rupees, between 18 and 20 rupees EPS. So if you're looking 3 years, then I think at 20 rupees or 19 rupees at 420, it's just trading at 22, 24 times 3 year forward earnings, looking very good. Mastec is looking even more cheaper, but the growth is slightly lesser here. But Mastec currently on 1 year forward earnings is trading at only 18 times. So both is a buy in my opinion if you have a 3 year time frame. So this is exactly what I want to say right at the end, that Have a 3 year time frame. Look at these stocks that you're holding from a 3 years perspective, and you'll understand how cheap they are and how the performance would be. So I think the move will happen. It is just a matter of time. I'm very, very confident that okay, you have to take the pain in order to make money. And this is exactly what I'm saying, that those who have been in the market before 2019 would understand that you have to have a gumption, you have to have a kind of steel in this market to hold on to your positions, have this conviction even if you're down 25-30% in top quality companies. I'm not saying in companies which are bad, which are not performing, which are increasing debt, or there's something happening, something or the other in the corporate governance issues happening. You have to exit that in losses, and I made a video on that, that you have to exit at 30-40% losses. But in top quality companies, you don't have to panic. You have to either add, and if you don't have the money, and I'm presuming that most retail investors don't have the money right now to invest, then it's better to just stay put. Understand that the market is not good at the moment. You have to ride the tide and then make money later on. Want to hold happiest minds for 2-3 years, can add more. If you can add more, wait for the results. No matter what the result reaction is, if the result are not that great and the reaction is bad, I think around 800, 820, add more. I think for the next 3 years, these are good levels to add something like a happiest mind. You have to understand one more thing. The sector, understand the sector is down 30%, and the high flying stocks will be down even more, and that is exactly what has happened. Happiest minds is down 45-50%. But once the sector revival happens, suppose, let's imagine that after 2 years, IT would be at new highs. There will come a time in the next 2 years that IT will be at new 52-week high. These stocks will not remain, a happiest mind will not remain at 850. A Mastec will not remain at 32, whatever, 2400 and all those things. Santosh, Nomura downgrades IT stocks. My 30% portfolio is IT, mainly mid cap. What to do? Currently at a loss of 25% in IT stocks. Well, you are part of the family, Santosh, and that this is nothing new. That brokerage houses downgrade companies when they are close to 52-week lows rather than when they are at 52-week high. So where was, and I'm going to be very cynical about it, I'm sorry to say, I think people might not like it, but where were these brokerage companies in January when these stocks or KPIT were at it was at 800, and something like, I mean, Mastec was at 3600, etc. I remember a target of 1100 given by one brokerage firm on KPIT when it was at 750. I remember Mastec's target being 3800 when it was at 3300. Uh, I remember many of the stocks targets were at least 30-40% higher in this. I remember something like Birlasoft, I think, in one of the reports, and kindly do put it in the comment box, where Birlasoft's target was closer to 600 in a year's time or something. Birlasoft is right now, I think, at 350, 330. I don't know. Can somebody post what is the price of Birlasoft at the moment? So I take downgrades very positively, because when India got downgraded in 2020 because of the scenario, in fact, late 2020, uh, we had the biggest rally of probably of the last 12 years. So yes, take it positively. Do not do anything at the moment. Hold on to your stock. These are top quality companies. It will take time. These stocks can go down another 10-15%. I'm not ruling that out, but look at the numbers. You have to go by the numbers, whatever these companies are producing, whether these companies have guided for those numbers and whether those numbers are coming in or not. And that is exactly why Divi's lab has been bashed up, because Divi's has gone back on their call on expanding and everything else, and the numbers and so on and so forth. It is not because of the kind of results that have come out. But here, if you look at IT companies, first of all, I like them more than the pharma companies, because they, even your top quality IT companies, their management is good. Their management are very good, and they give decent guidance. They don't go say they don't go overboard in a very positive market, that yes, we are going to do 70-80% growth and all, just because that their stock is at 52-week high, and they don't go underboard, that they don't say negative things very negatively. So there is a lot of growth possible in the IT industry. Yes, there are cost pressures across the board. So for example, okay, let me ask you again in a different manner. Suppose you sell IT and I give you the money for the losses that you're making. What will you buy? End up making. Suppose you are at events and you end up selling these. What will you buy? And I would like to know, like, if you sell IT in this kind of a scenario, inflationary scenario here in India, and there's cost pressure, if you sell IT and say even some chemicals or export oriented companies, what will you end up buying? You'll end up in the mid cap. I'm not saying in large cap. In large cap, you might buy a Asian Paints, you might buy Pidilite, and so on and so forth, and might get away with it. In mid caps, I don't have a confidence buying into real estate. I don't have a confidence buying into other consumer companies which are India oriented, say a Polycab, Astral, etc. We have seen what has happened with Astral over a period of time. I don't want to buy into companies which have a lot of bearing on oil prices and cost pressures of metals, etc., which is the prices are extremely high. So in my opinion, I don't have confidence buying into in fact I'm saying mid caps. I'm not saying HUL, Nestle, etc. I'm saying mid cap consumer. Even mid cap consumer companies are in deep trouble with the kind of inflationary price. They will not be able to pass on the prices. So of course you'll end up buying Asian Paints, Pidilite, Titan, Nestle. I know about all these things, but will you make money over 3 years? What will happen is, and this is exactly what will happen. What will happen is retailers will sell their mid caps, even good quality mid caps, get into large caps at this point of time. Large caps will perform for 6 months. You will make 15% there. You'll not sell large caps, and the mid caps will start performing after 6 months, and they'll perform big time. So these stocks will make circuits. You'll have a Titan and Asian Paints doing 1-2% here and there. You'll get frustrated, most of the retailers, and then you'll sell your large caps when they have settled down. They have made money for you, whatever they can. So large caps can give you 15% in a year. They're giving you 15% in 3-4 months. You'll sell those, and when the mid caps have doubled, tripled, you'll get into mid caps and small caps. That is what I'm trying to tell you, that it is better to just see through the phase, maybe 1 month, 2 months, 6 months, whatever, at max 6 to 8 months, and then you will see the kind of returns you'll make. So another example I can give you, that in 2019 and 20, when I had Kilpes, Dixon, and Tanla in my portfolio, they were down 40% and 40 to 50%. I had no money to invest more. I had no guts to sell at 40-50%, to be frank. And I knew that these companies are debt free. They are making profits. They are doing well. It is just that the market is down. Eventually, we know what happened later on, although I sold early. That's a different point, and we'll discuss that in some other live session if you want that. But we know what happened with the kind of move happened, and the similar move happened in 2016 March, from March 2016 March to 2017 December. And I feel when the tide will turn, it is going to be a 2 year thing. It is going to be just like what happened between 2016 March to 2017 December. So all in all, what I want to say here is that just stay put in a sequence, in other stocks. It might not be 1 year even for your prices to come back and you make some profits. And if you can hold on 1 year to 18 months, you'll make very decent profit, because we know that when a rally comes in mid and small cap, the rally is humongous, just similar to the painful fall we are seeing. So it will be a humongous rallies. You'll see upper circuits in these stocks because the numbers are there in these companies. All right, I'll spend just 5-7 minutes for answering your queries, and then we'll get this done, because the session has already been long. So if you have any queries, you can shoot that to me. Kindly use the super chat, super sticker feature. I will try to do longer sessions similarly like I did today, uh, uh, later on as well on a Sunday. Uh, See, now this is the thing, Santosh. I don't know. They will fall more, but I don't know whether they will fall or not. But I can tell you, SHIL will be 1200 in the next 2 to 3 years. Will be 1200. I can stick my neck out and say that over the next 2 to 3 years, on one day you will see Acrosel trading at 1200. It might fall from there. It might fall from there, but SHIL should be 1200 over the next 2 to 3 years. The numbers are there. Next 2 quarters will not be great. The management has said next 2 quarters will not be great, and that's why the selling is happening. uh, in terms of Acrosel, they have come out with around 5,000 crores of sales this time around. Acrosel is currently, I think, trading at below 600, close to 550, 540, all those things. Currently, the market cap is pretty less. I think it is trading at 3 times sales. Again, Acrosel, in my opinion, is 1,000 rupees stock over the next 2 to 3 years. I think it should at least double from these levels. Will they fall? I think they can fall. I think these stocks can fall. I think the index can fall, the mid cap and small cap. I'm not saying that, but you should be ready for the next 1 month at least to see fall happening. It might get arrested, but I think it won't get arrested at least till the RBI meet. Once the RBI meet is over, then we can probably discuss as to where we are headed next. See, Asian Paints in the short term will not get impacted. Asian Paints over 2 year may get impacted. Asian Paints over 5-10 years will not get impacted at all. If you have taken a trade in Asian Paints, exit. If you have taken a 2 year position, don't do anything. If you have taken more than 2 year position, add more. I hope that answers your query. I am having Asian Paints. I am having another of similar stock in my portfolio, and that is for 15 to 20 years. I keep on accumulating. Right now I am not accumulating purely because I don't have any extra funds to invest. Otherwise I would have bought and bought big at these levels. All right. I think Somani Home you're asking, and I've talked about Somani Home already, so you can reverse the tape and talk about it. See, Sigachi, again, a stock that I have, I'm very positive on it now at 250, 260, at around 15 times 1 year forward earnings. It may go down even more from here, but I think over 2 years, especially with the kind of capacity that is going to kick in from December of this year, I think we are headed towards even 1,000 on it. I'm very positive. Not many people will talk about it when the market falls. Then people talk about lower levels. I can say here I'm positive on Sigachi, and I believe 800, 850 is is a possibility, is a big possibility over the next 1 year or so, 1.5 years, and over the next 2 years, I see even 1,000 levels on the stock. See, Sequence Scientific, if you have the money, you can buy here in terms of 3 years time frame. I see it going back to new highs. Uh, I think in the next 1 year, I see the stock going to 170, 180. I think the numbers are decent, not very good, but not very bad the way the selling is happening. Although, in terms of the numbers, my initial target right now comes out to be around 85, 86. I think that is a possibility on the stock. See, TCS, you can add more at 3,200. Do not fear what is happening in the IT index. This is a big opportunity to buy. I can say that. Yes, they can fall more for a month, maybe 2 months, but IT to me will be big. I mean, if you look back at this time, 3 years from now, say in 2025, you will understand how big a opportunity in mid and large cap IT this is. So that is the thing. I'm not saying short term. In the next 6 months, anything can happen, especially in the next 1 month. Market could fall a lot. So FL, I believe that can fall more. I think FL might be headed lower because it is highly priced. Many of the stocks that are highly priced are getting bruised and battered, and so something like a Naukri, FL, etc., Dixon, DMart, and so on and so forth may get bashed even more. So but that is a no-brainer. Uh, I think you have to get into reasonable stocks. even now. And if you can't, then hold on to these companies for the next 2 3 years. Whenever the tide turns and there's a huge rally in stock, these will also go up. All right, guys. Thank you. Thanks a lot for being online, for all the support. Kindly do subscribe to my channel, hit the bell icon so you get my videos straight away when I post it, and support me on Patreon. Thank you.